Hello and welcome to Pro Trader Strategies Market Commentary for Friday, November the 20th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that comes in to impact the markets with some of my market analysis. I do the same thing for you folks in these daily market commentaries, but I'm going to go a little bit further and talk about the option strategies I'm implementing into my portfolio in order to increase my probability of success. And I'm teaching you guys those guidelines that I follow in order to find the right strategy for that given assumption. We aren't just picking option strategies out of the hat here. What we do is we look at the underlying after we've come up with our directional assumption, and then look at the internals of what's going on in and around that underlying to find the right strategy for any given assumption. If you're bullish, we're not just buying a call. All right, we are looking at what the volatility is, the days to expiration, how long our assumption's going to last, and that will lead us to the right the right strategy. All right. Anyway, let's get on with the overall economic data and see how that's impacting the markets. What do you say? All right. One thing we didn't have a chance to talk about was before the close of the markets anyway. Last night after the close, Japan came out with their flash manufacturing PMI, and that came in a little bit worse than expected. Below 50 is contraction, above 50 expansion. Well, it came in at 48.3, expected to be 49.4, still expected to be below 50, but coming in worse is never a good thing right now anyway. Across the pond, we got this today, Friday the 20th, we got some economic data out of Germany, PPI, coming in line with expectations at 0.1%. Great Britain's retail sales, 1.2%, better than the expected negative 0.3%. They did revise last month's number down just slightly from 1.5% to 1.4%. And then we also had Lagarde speaking again, like the guy's going to go hoarse by the end of the week, it seems like. And then Canada, we don't really talk about them, but Canadian core retail sales coming in a lot better than expected at 1%. Retail sales, when you put back in some of the more volatile aspects of that number, which is automobiles, that came in at 1.1%, expected to be 0.2%. So good to see retail sales at least working out over in Europe right now. All right, so let's take a look at the overall markets. We've got crude oil, slightly negative territory, but at the end of the day, it's right there at the point of control and nothing to see here. We're going to really have to see the markets make some moves in order for us to see this market really start moving around. Some manufacturing really is what we need to see out of crude oil to get crude oil moving, I should say. All right. Gold futures up $10 on the day. Again, I do think that this market has risk to the upside more so than the downside. And the reason why is because I think once we get this big stimulus package, it's going to cause gold futures to move higher, as it is a dollar denominated asset. It is very sensitive to how the dollar reacts to stimulus and things of that nature. Weakening dollar will really give crude oil, will give gold. It will give crude oil a little bit buoyancy also, but more so it's going to affect gold there. Bonds, yeah, they're starting to move a little bit higher, but we're right there up against. I'll go back to that chart because there was something I wanted to talk about. I thought I'd just move on, but let's take a look at the bonds real quick. All right, bonds up about a half a point on the day, off of the highs, but we did go up and test that 50-day simple moving average, and it is acting as resistance today. I mentioned it yesterday. It looked like we were going to go up there and test it yesterday, but today we did make that test of that, and we're starting to lose a little steam throughout the day here, but I do expect bonds to continue to the upside. Again, I think their risk is to the upside as well. The VIX is coming off, despite the fact that we're seeing here in the Dow Jones Industrial Average. It looks like that rotation we were talking about as rolling out of tech and into some of the bellwethers is really not in full swing right now. We are moving higher off of the lows here. Again, I was talking about it looks like we're going to roll over to the point of control. still feeling like that risk is to the upside here in just about every market for the most part. And the equities more so involved, because I think that we're eyeing that overnight high of 3,000, especially here in the Dow Jones. I think that market wants to be printed during the daytime session. NASDAQ is is higher on the day, near the highs of the day actually. And again, was looking like we were going to start rolling over again, but a continuation here of higher highs recently, higher lows, and that's making this market want to go back into this trend channel that we've had set up for several months now, maybe even years at this point. No, I don't remember how far back that goes. I probably should go check. All right, E-mini S&Ps off by about 5 points right now, but again, the real story here is the markets are coming off of their lows and near the highs of the day now throughout the session. There's not a whole lot being talked about today other than the Pfizer, Moderna vaccines. That's really what has been in the news for the most part. Again, yes, we have broken out of that little bit of a tighter range that we were talking about, but the rubber band is still winding up here, you guys. It has been in that sideways trend channel for a while, and it is building up some energy. I always talk about this. It's going to snap one direction or the other. Don't necessarily know, but I would lean towards the snap to the upside here in equities. So we actually even talked about the butterflies in our webinars, Roadmap to Trading Options. You guys should check those out because it is great for a market that is ready to pop and snap out of its range. So it could work out quite nicely for some of these equity names that we've been talking about, and the indices as well. So more so maybe even the indices, because you don't have to worry about earnings, dividends, and things of that nature. All right, so other than that, I have been pretty quiet today, sitting on my hands, just kind of waiting for the market to make a discernible move here. So I'm sitting on everything that I have. I still have on a strangle in DIA, waiting for that pop to happen. It's just really not going to happen today or anytime soon. So that theta decay is really eating away at it. I'll probably try to cover it for just a couple of pennies here by the end of the day. It's really almost at a full loss, but I'll scrape some pennies up off the ground here in that trade. And if you guys remember, I did the November, and I bought the 260 puts and the 292 calls, waiting for a big move. Yeah, I got that big move. It went above my long calls. It's in the money. Those long calls are in the money. I don't really want to take DIA into my account as a long, so I'm just going to cover that trade so it doesn't get, so I don't get the stock, despite the fact that yes, it is higher. Why wouldn't I just take possession of that DIA and wait for the breakout, maybe roll it out a little bit longer? Well, at the end of the day, I played it for a trade, and I'm still unsure of the downside here. So this would be all upside target here. Yes, I do believe the risk is to the upside, but I also think there's risk to the downside. So I don't want to just leave this on as a naked long in DIA. Plus, you know, if I were to cover the trade, get out of it, you know, legging in and out of that, I might end up getting out of that worse on Monday if there's some news over the weekend, right? So I'm just going to take my profits. Yes, I will still get the intrinsic value of this trade because any in the money option has intrinsic value. At least the benefit is worth the distance. So you don't have to, I don't have to call this stock away from somebody, take it into my account and cover it in the open markets. I actually have a little bit even more extrinsic value in that trade until the end of the day. All right, so that's about it. Just keeping an eye on that. Probably will be covering that strangle though today in DIA at some point. It's probably going to be relatively soon too. So let's just take a look at DIA. You can see that it did get that move. I didn't cover it when it traded up into the 30, but I needed a little bit more to the upside in order to cover that full trade. As a matter of fact, I bought it for like $12, right? So my break even on that trade is basically 304. So that's what I was kind of looking for, 304 for that out, to be able to get out for a scratch there. All right, so that's about it. Hope you guys all have a great weekend. Last thing we got to talk about is our disclaimer, so please take a moment to go over this, as there are risks involved in trading. Okay, so if you can't take that, take it easy.